Hello, the company that I picked for my accounting project is the British company Vodafone. Vodafone's top line sales revenue increased by 2.1% in 2020 compared to the previous year, while the cost of goods sold rose by 1.17. The cost of goods sold figures for the cost of goods sold figures, we can say that the cost of goods sold only rose by 1.17% on a yearly basis. On the other hand, the company's interest expense skyrocketed 69.9% in 2020 compared to 2019. Cost of goods sold, excluding depreciation and amortization, declined for the company from 2019 to 2020. Vodafone's depreciation and amortization expenses rose from 8.6 billion Great Britain pounds to 12.4 billion Great Britain pounds. Vodafone's cost management has been successful, as can be seen from the 17% decrease in cost of goods sold expenses. The surge in depreciation and amortization can be attributed to capital expenditure for the new plant and equipment, which means that Vodafone did a lot of investment in that area in the year 2020. While the company's pre-tax income skyrocketed from 1.5 billion to 2.9 billion Great Britain pounds, this is due to the increase of taxes, especially in foreign countries. As you can see, the income tax foreign has been recorded as 158 million Great Britain pounds in 2020, while the income tax has been recorded as 1.09 billion. The bottom line is that company's net income has increased to 804.9 million Great Britain pounds in 2020, nonetheless with an increase from 3.96 billion of Great Britain pounds in 2019. Since there is a negative profit, the company management was not able to distribute dividends. Vodafone's EBITDA margin has decreased from 31.8% in 2019 to 42%, which illustrates the increase in profitability of the country, which might result from an efficient cost management of Vodafone. From the balance sheet, it's possible to analyze the company's cash position has decreased 21% since 2019. Which can be attributed to the increase in investments in capex, while the total account receivables remain steady with only 3% of decrease from 8.7 billion Great Britain pounds to 8.4 billion Great Britain pounds in 2020. Vodafone's inventory position has also declined by 16% to 517 million Great Britain pounds from 615 million Great Britain pounds in 2019. Vodafone's net property, plant, and equipment rose from 23.6 to 34.6 billion. Due to the heavy investment, the company's depreciation as well as amortization expenses also rose over the last 2 years. Another important aspect is that Vodafone intangible asset rose from 35 billion Great Britain pounds to 47 billion Great Britain pounds, corresponding to 34% increase. The company's total assets rose by a margin of 20.8% from the year 2019 to 2020. For the liabilities, Vodafone's short-term and long-term debt surged exponentially, resulting in a 284% increase. Vodafone's long-term debt rose from 55 billion Great Britain pounds to 42 billion Great Britain pounds, corresponding to a rise of 32.6%. However, long-term debt had also increased in 2019 by more than 40%. Vodafone's share of total liabilities to total assets surged from 55.6 to 62.7% due to the higher investment of capex, which means that this can have some downside effects since the company's interest expenses would remain higher in the coming terms. Overall, given my final evaluation, we can say that Vodafone has invested heavily, probably in the new technologies during 2019 and 2020, which increased its liabilities and interest expenses, while the successful cash management maintained the company stable during the pandemic. Investments will represent a better financial future